Bootstrapping, in the context of business, refers to the practice of starting and growing a company with minimal external investment or financial resources. It involves leveraging personal savings, reinvesting profits, bartering, and maximizing efficiency to operate on a tight budget. This approach emphasizes creativity, resourcefulness, and self-reliance, compelling entrepreneurs to forge innovative paths to build their ventures. The significance of bootstrapping lies in its empowerment of entrepreneurs to maintain full control over their businesses, avoid debt, and foster sustainable growth from the ground up. In an era where funding can often dictate the trajectory of a startup, bootstrapping offers an alternative that's not only financially prudent but also encourages resilience and ingenuity. Consider the example of Spanx, founded by Sarah Blakely. With just $5,000 in savings, she revolutionized the hosiery industry by designing a more comfortable, body-shaping undergarment. Sarah's determination and strategic use of her limited resources propelled Spanx into a billion-dollar empire without the crutch of external investors. Another compelling case is MailChimp, an email marketing platform that Ben Chestnut and Dan Curzius bootstrapped from its inception. By focusing on customer feedback and iterative product improvement, MailChimp grew into a powerhouse, eventually attracting a significant acquisition deal. Supporting opinions highlight that bootstrapping can lead to more disciplined financial management and a heightened focus on customer needs, as entrepreneurs are often closer to their market. Critics, however, argue that the lack of external funding can limit a company's growth potential and delay the scaling of operations. The debate often centers on the balance between rapid growth facilitated by venture capital and the sustainable, albeit slower, progress typical of bootstrapped companies. Challenges in bootstrapping include the constant pressure to manage cash flow carefully, as well as the potential for slower growth compared to well-capitalized competitors. Additionally, bootstrappers might face difficulties in scaling quickly or expanding into new markets due to financial constraints. Yet, these challenges are often counterbalanced by the advantages of maintaining strategic control and avoided debt. Bootstrapping aligns with and influences other facets of innovative funding by encouraging the exploration of alternative, non-traditional financing methods. This mindset can inspire entrepreneurs to consider crowdsourcing, strategic partnerships, or angel investors at later stages, once their business model has been validated. Ultimately, the art of bootstrapping not only fosters an entrepreneurial mindset of resource optimization, but also serves as a vital cornerstone in the broader conversation of innovative funding techniques. In the realm of entrepreneurship, the art of bootstrapping, innovative funding techniques without a dime, revolves around the creative strategies entrepreneurs employ to start and grow businesses without relying on external funding. Central to this is the concept of bootstrapping, which refers to building a company from the ground up with personal savings, reinvested earnings, and an entrepreneurial knack for making do with what's available. The importance of this approach lies in its emphasis on maintaining control, fostering innovation, and promoting financial prudence, making it a vital strategy for entrepreneurs who either cannot or choose not to pursue traditional investment avenues. The significance of bootstrapping is profound. It encourages cost efficiency and resourcefulness, traits that are invaluable for any startup. By not relying on external funding, entrepreneurs retain complete ownership and decision-making authority over their ventures. This not only aligns with a vision that may be crucial to the brand identity, but also circumvents the pressures and demands that external investors often impose. Moreover, by prioritizing revenue generation from day one, bootstrapped businesses are often more customer-focused and revenue-driven. Real-world applications of bootstrapping are plentiful. Consider successful companies like MailChimp and Basecamp. MailChimp, a giant in the email marketing arena, was launched without any external funding, allowing its founders to perfect their product in alignment with customer feedback without external pressures. Similarly, Basecamp, a project management tool, started as a side project and grew gradually through customer funding. These examples illustrate how focusing on building a solid product and scaling sustainably can result in significant success without upfront investment. There is considerable support for bootstrapping from those who argue that it nurtures disciplined financial management and strategic growth. Proponents suggest that the pressures of limited resources drive creative problem-solving and innovation, often resulting in sharper business acumen. However, bootstrapping isn't without challenges. Critics argue that lack of sufficient capital can limit growth potential and hinder the business's ability to scale quickly, possibly allowing competitors to overtake market share. Another challenge is the personal financial risk entrepreneurs undertake, which can be daunting and stressful. Nevertheless, bootstrapping influences other aspects of entrepreneurship by fostering a culture of innovation, adaptability, and resilience. These principles are crucial not only in funding but also in their product development, marketing, and business growth strategies. It underscores a foundational entrepreneurial spirit that can permeate and guide all facets of a business, emphasizing the resourcefulness and tenacity that define successful ventures. Creative resource utilization. Leveraging existing assets refers to the strategic use of resources already at hand to drive business growth and development without the need for significant additional financial investment. In the context of bootstrapping, this approach is vital as it empowers entrepreneurs to maximize their potential and build their ventures by making the most of what they already possess. This can include physical assets, personal skills, networks, and even digital resources that may be underutilized. The significance of leveraging existing assets lies in its cost-effectiveness and sustainability, making it a cornerstone of the bootstrapping philosophy. By doing so, entrepreneurs can maintain full ownership and control of their businesses, avoiding the pitfalls of early-stage external funding, such as equity dilution or debt accumulation. This strategy enables a focus on self-reliance and innovation, fostering a resilient business foundation. Consider the example of a small bakery using its kitchen space after hours for cooking classes. Here, an existing asset, the kitchen and baking equipment, is creatively leveraged to generate additional revenue streams. Similarly, a freelance graphic designer could utilize online platforms to showcase their portfolio, utilizing the internet and digital design tools they already own to reach potential clients worldwide. These examples illustrate how tapping into what one already has can open up new business opportunities without monetary investment. Experts often argue that this method encourages innovation and adaptability. Kevin Plank, the founder of Under Armour, famously started his business by using credit cards and existing resources, such as his car and apartment. This exemplifies the resilience and creativity often necessary in bootstrap ventures. However, there are challenges associated with this approach. One potential downside is the limitation it could impose on growth if the existing resources are not scalable. Additionally, relying solely on current assets might lead to missed opportunities where strategic investments could yield higher returns. Despite these challenges, the principle of leveraging existing assets is deeply interwoven with the broader concept of bootstrapping. It aligns closely with other key aspects of the topic, such as innovation and entrepreneurship. By focusing on what is already available, businesses can often uncover hidden potential and efficiencies, driving forward progress without external funding sources. Overall, creative resource utilization is an empowering approach that encourages entrepreneurs to think differently and act resourcefully, which is the essence of successful bootstrapping. The concept of the art of bootstrapping, innovative funding techniques without a dime, revolves around the idea of starting and growing a business without relying on external funding, such as loans, investors, or venture capital. Bootstrapping essentially means building a company from the ground up with personal finances or the revenue generated by the business itself. The significance of bootstrapping is profound, especially for entrepreneurs who want to retain full control over their business without the pressures and demands that come from investors. It allows for complete autonomy, meaning founders can make decisions that align with their vision and goals without having to justify them to external stakeholders. Moreover, bootstrapping promotes resourcefulness and creativity, as entrepreneurs must find innovative ways to grow their businesses without the cushion of additional funding. One real-world application of bootstrapping is seen in the story of Spanx, founded by Sarah Blakely. With just $5,000 in savings, Blakely developed and marketed her product, effectively leveraging limited resources by personally working on sales and marketing. This approach not only conserved funds, but also ensured that the growth of Spanx was organic and sustainable. Another example is MailChimp, an email marketing company that started as a side project with no outside funding. Ben Chestnut and Dan Curzius, the founders, emphasized customer feedback and incremental growth, which allowed them to build a multi-million-dollar company without losing equity or control. Supporters of bootstrapping argue that this method fosters a culture of efficiency and wise financial management, as businesses must prioritize profitability over mere growth. This approach often leads to healthier business foundations and more resilient companies in the long run. However, bootstrapping is not without challenges. One significant hurdle is the limitation in scaling rapidly due to financial constraints, which can make it difficult to compete with well-funded rivals. Additionally, the pressure to generate immediate revenue may prevent founders from investing in long-term, innovative projects or research that require larger upfront costs. Critics also point out that not all business models are suitable for bootstrapping, especially those that require significant capital investment before becoming operational. Bootstrapping intertwines with other aspects of starting and growing a business, such as strategic planning, marketing, and customer engagement. By cultivating a mindset of innovation and efficiency, entrepreneurs who bootstrap often develop skills and insights that are invaluable in sustaining long-term success. Ultimately, whether or not to bootstrap is a decision that influences a founder's approach to risk, growth, and company culture.